Hey RT family, Ryan Reynolds here with Keller Williams Consultants Realty and your September 2023 real estate market update. So what's going on in September of 2023? Well, we're having a lot of things that are going on, but I really want to focus on just one key statistic or key metric that we can talk about, and that is mortgage interest rates. And the reason is that mortgage interest rates probably have the biggest impact on home purchasers and even really sellers, and we'll talk about how that happens more than anything else that's going on in the world. So let's talk about that first. So historically speaking, we had been in a reducing interest rate environment really since the mid 80s when people were complaining about 18% interest rates. They've slowly been lowering that, and over time to where it bottomed really like July, August of 2021 around 2.9, 2.8%, and that was a crazy low interest rate because the historical average is right around 5 to 6%, somewhere in that range, just considering all time. But nevertheless, back in July, August 2021, we were at about 3%. Since then, the Federal Reserve has been using interest rates to temper the economy, try to slow it down by raising those really quickly. In fact, they raised them so quickly that there have been several banks that, I think there was 3 or 4 banks that have failed because they were playing a spread that they didn't expect to change that quickly, and it did, and then they got caught. Anyway, those banks are out of business now, and I'm sure you've seen them in the news. We're going to talk about that maybe some other time. But nevertheless, to say that interest rates have been going up to where fast forward to present day, here the week of before Labor Day of 2023, the rates were right around 7.49, and that is the highest that I've seen them in a long, long time. Then a bunch of negative economic news came out. The economy was not doing well, which caused the market for mortgage rates to change in that they came back down to just above 7, and that's pretty much where they were for this week, and this is the week after Labor Day that I'm filming this. Anyway, all that's to say, the last few weeks have been really slow. Like, we were expecting to see a lot more activity on some of the listings we've put up. Our buyers have actually been able to get maybe make offers on properties and not have any competition, and so the market has really been different. And so that's going to probably change here in the near future, and I'm going to tell you why. There is a number that is the margin that goes between the 10-year Treasury note and the 30-year fixed mortgage, and that's typically about 1.7%. You're going to see that spread. In the last probably year, that spread has been 3%, so almost double what it normally is, and that's based on the fact that the market thinks that the Federal Reserve is going to continue to raise interest rates. At some point here in the near future, the Federal Reserve will stop. In fact, they took a break, I think it was in July, and didn't raise interest rates then, but they did in August. Not sure what they're going to do here this next month. But when they get to a point where they finally stop raising interest rates, the market should recognize that and lower that margin back down to closer to 1.7, which would mean 1.25 or something like that change in from where we are now to where we'd be. In today's terms, that would mean we go from around 7.1 down to 5.8, 5.75. That would have a dramatic impact on the market. And so I do expect that to happen sometime in the next 6 to 12 months. I don't know when, but here's the opportunity that comes about right now because of that. If you're thinking about buying a house and you can afford, or trading up, and you can afford the mortgage based on the current interest rates, I think you can buy now with less competition and then get into a house maybe even a little bit lower price than you could say coming up in the next spring when rates have come back down. The reason being is there's just not as much competition. Then what you could do is you could refinance your mortgage once the rates do fall down. And again, you have to be able to afford it at the higher interest rates. But when rates eventually come down, you can refinance that. In fact, a lot of lenders are offering to refinance your house for you if you were to buy one now within the next 3 years. And if you have questions about that or need someone that can do that, reach out and we can connect you. So that's all I wanted to talk about with interest rates today. It is the biggest thing impacting our market today, and I expect that to get better. But this is the opportunity time. If you're thinking about buying or selling, I think you should do it now because I don't think the opportunity will be here later, with interest rates going to be probably falling. And then also the Intel and Google and Amazon and Microsoft impact of all of that building, and Honda. You just keep naming all these billion-dollar projects that are coming to town. I have to think that prices are going to be going up. That's all for today. My name is Ryan Reynolds. I'm with Keller Williams Consultants Realty. And as always, it's the Ryan Reynolds team, unlimited opportunities and exceptional experiences.